Hello and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. Stocks seeing a boost from tech heavyweights here as investors pay close attention to Nvidia's big investment in Intel. We're digging into whether that will revive Intel long term and what it all means for the chip sector going forward. Right now, there's just now to go until the closing bell in stocks. They are higher. The Dow is up about 165 points. The S&P 500, your broad gauge, is up about 0.6%. Your tech-heavy NASDAQ, that's up 1.1%. By the way, your small caps up 2.2%. Let's welcome in now senior reporter Allie Canal. Allie, what do you see in the trading action so far?
Well, as you were just saying, Josh, a sea of green throughout Wall Street, and all three of the major indexes are on track for record close. You mentioned that small cap Russell 2000 index, also on track for an all-time closing high. So Dow up around 175 points. NASDAQ leading the way higher, a massive jump of 1.1%. The S&P up around 0.6%. Now the NASDAQ is getting a big boost from shares of Nvidia, which are up over 3%, along with shares of Intel. And this comes after Nvidia committed $5 billion for a 4% stake in Intel. Intel shares are on the move today. They are up around 30% at this point. It's also interesting to see shares of AMD. AMD, one of the competitors to both Intel and Nvidia, off around 1%. So off of the lows that we saw. But when we look at the future of PC demand, GPUs, data centers, that's all connected here. So the chip sector very much in play today, but it certainly is a risk-on day for the markets. You have your tech sector leading the way higher, no surprise there, but only just a handful of sectors trading in the red. Consumer discretionary is pretty much flat. Energy, consumer staples leading the way lower here. So very much a risk-on day in markets. And speaking of risk-on, I want to get a quick check of Bitcoin because we are now trading, I believe, above $117,000 a coin. We're actually approaching 118,000, and that's been a level that strategists have flagged as a key technical level to watch when we look at the momentum for Bitcoin. We've really struggled to surpass that 120,000 milestone. We briefly peaked there earlier this summer, but we are starting to make our way forward, and year to date, we are up around 25%. The dollar has moved a little bit higher after that Fed rate cut. We are still down 11% since the start of the year. The US dollar index really brutalized since the beginning of 2025, but we have seen just a slight bit of an uptick. If you take a look at a 2-day, you can see after that policy decision, we went up a little bit, and that did weigh on some precious metals, gold in particular, pulling back from some of those all-time closing highs. Josh.
All right, Allie, thank you. Well, Nvidia to invest $5 billion in Intel shares, the investment representing a 4% stake in Intel. Is coming after the Trump administration, remember, took a 10% stake in the chip maker back in August. For more on what this means for the U.S. chip space, let's get to Creative Strategies CEO and principal analyst Ben Bajarin. Ben, my friend, always great to see you. So Intel has attracted investment now, Ben, from Uncle Sam, SoftBank, and now Nvidia. Analysts saying all in $16 billion flowing into Intel's coffers. What does all that capital mean, Ben, for Intel? Does it solve for the company's challenges?
Yeah, I mean, obviously it doesn't solve all of the problems. I think it's a step in the right direction. I think just having a float of capital is going to be good for, one, their confidence, their ability to invest in some of the areas that they need to invest to, not just in product, but parts of foundry. It's been a real big discussion about how much they need to keep going in foundry, and I think everybody wants them to be successful there. So the ability to keep, not having to cut costs and invest in what they need to do in R&D to make sure that 14A and ladder goes forward is a big deal. They still need customers at scale for that. So that's the part, we don't know yet. But I think the vote of confidence in all of this, people's belief, I think Jensen Huang even said on the call, that this is a great belief in Intel's future and where they're going. And so all of that, right, I think just speaks to people want Intel to succeed, want them to stick around for a while, and more importantly, have done their due diligence and believe that that the future is bright for Intel.
Let me ask you, Ben, when you look at the stock move in Intel today, it is booming. We're up 23% right now. Does that move make sense to you, Ben? Is it justified? When you look at this, and of course, this is a product deal. It's not a foundry deal.
Yep. Yeah, no, I think it makes sense again on the back of the potential and where this goes, right? The opportunity for Intel. This is a huge opportunity for Intel product, right? One of the biggest questions of investors has been, we're going to wait and see, and we hope that product delivers. If product delivers, then we can see some upside. So I think this is a vote of confidence that Intel product on next couple of product generations is well positioned. And I think again, people are reading into this, perhaps correctly, that there is some foundry life to happen here, right? Some of these products might very well be packaged at Intel, right? Not necessarily manufactured Nvidia's parts, but the packaging, the advanced packaging, which Jensen brought up on the call, that's a potential for Intel Foundry. So I think there's parts of that lead to the bull case for Intel when it comes to wanting to see Foundry succeed. So it's really that a lot of things that people had questions about seems to be shed light on, that this is a positive move. Some of those questions are trending in the right direction. And I think that's why you saw, the stock move, because arguably Intel was undervalued if you believe they had a great foundry future and they could regain share in places like servers and PCs and cement their dominance with product in those areas, which has been a giant question mark.
Do we think, Ben, the U.S. government, which has a stake in Intel, do we have any reason to believe, Ben, that maybe the U.S. government encouraged this deal in any way?
Yeah, I mean, Jensen Huang, right, CEO of NVIDIA, said on the call that the government had nothing to do with this. In fact, a couple of notes came out on LinkedIn from some folks in Intel sales who were involved in this, that this has been going on for almost 5 to 6 months, which is around the time that Lip-Bu took over. So it sounds like he started this day one, kind of went to Jensen and said, look, whatever you need, let's do it. Let's figure out what this looks like. There may, again, I'm never going to discount any form of politics or appealing to the Trump administration in an era where tariffs are, at an all-time high. But I would say, they're certainly indicating that is not like a primary factor of this, that they had no involvement. But again, you have to imagine that there's always potential, right, for a geopoliticking of these deals.
You mentioned Intel CEO Lip-Bu there, Ben. What does this tell us about him as a CEO, as an executive? It wasn't, Ben, too long ago Trump was calling for his resignation.
Yeah, no, I mean, such a turn of events, right? There was everybody calling for his head. He's aligned with China, and now, he kind of came out and has really done some deals with Trump. In fact, I was thinking about this too, is as great of a deal maker that everybody, likes to promote Trump as. It looks like Lip-Bu is equally as good as a deal maker. And I think, again, right, this comes back to his approach that he stated from the beginning, which is they want to be very customer-centric. They want to be aligned with their customer interests. They want to be a provider of choice that delights those customers. Those are his words. And so I think him being able to go to someone like Jensen or any other partners and really say, whatever it takes, we'll do it. We'll deliver. We'll put the hard work in to make sure we hit milestones and we deliver. And clearly, Jensen believes him on that, because he said, right, we've done our due diligence and we believe that Intel has a bright future. So I think and if anything, right, it's just signaling he's the right person for this job, and he's able to get important deals done that are building a better foundation for Intel's future.
So, Ben, we covered what this means for Intel. I want to switch gears, get your thoughts on what it means for Nvidia, Ben. What does it mean for Jensen's ultimate ambitions in the PC and server markets?
Yeah, I mean, I think he's, again, right, crushing it in servers. I think everybody, knows that Grace Blackwell in particularly is in significantly high demand, with, lead times for that going upwards of a year. On the call, he did make a point, which I thought was really interesting, that they still see a lot of interest and demand for ARM-based, head node CPUs in AI accelerators, and he was limited in what he could do by not integrating an x86 part into a solution that's a rack-based scale-up, scale-out like Grace Blackwell. So it sounds like the way that he's thinking about this is that he'll be able to have on parity a Grace Blackwell system, which is ARM and NVIDIA GPU, with x86 and NVIDIA GPU in future products at parity. So I think that just strengthens his ability to go and compete, right? There's elements that I think he wants to fend off around AMD in both client and commercial and enterprise. And he even made some of these points on the call about wanting to go after that commercial laptop space, right? The number he gave in 150 million units a year is largely a commercial number, and deeply believing that a partnership with Intel gives him more line of sight into those client PCs that go into enterprise with a joint deal of best of NVIDIA and best of Intel product for laptops.
Final question, Ben, because you mentioned AMD and ARM. They are slipping in today's trade. What do you make of that?
Yeah, I think it's, again, just concerns about the competitiveness of, right, the dominance of Nvidia, and really just the stakehold that Intel has been for so long, right? It's been challenging for customers to gain share against Intel in client, right, and in enterprise. And so that union with Nvidia sounds very, very strong. But again, Jensen came out relatively around ARM and said, look, we're still committed to our roadmap with ARM. We're still going to have an ARM-based product that goes, neck and neck with anything they do with Nvidia. AMD's really, I think, the bigger question mark. Their Helios rack, that comes out next year, MI 450 plus, is going to be super competitive. But again, I think it's going to raise some competitive issues that AMD is going to have to deliver and really compete with in more ways than they had to before, where x86 is a desire of the landscape, whether that's an enterprise, data center, whatnot.
Ben, always great to see you. Thank you, sir.
My pleasure. Thanks for having me, Josh.
It was a high-stakes showdown over Federal Reserve independence heads to the Supreme Court. President Trump is asking the justices to remove Lisa Cook from that powerful board a day after it cut interest rates for the first time in months. Fed correspondent Jennifer Schonberger joining us now. Jen.
Good afternoon, Josh. As expected, the Trump administration has appealed to the Supreme Court to allow the president to remove Fed Governor Lisa Cook from the Fed Board of Governors while the High Court considers a lawsuit challenging the president's efforts to fire her. This emergency request coming after a federal appeals court here in Washington rejected the administration's attempts to try to remove Cook ahead of the Fed's policy meeting this week, where Cook voted to lower rates. The Solicitor General, John Sauer, argues that allegations that Cook committed mortgage fraud are sufficient cause to fire Cook, a cause that two lower courts have rejected. Both courts have also granted Cook an injunction to continue serving on the board as these legal proceedings continue. Sauer has asked the court to allow the administration to immediately remove Cook from the board even before the justices issue a decision on the emergency request. Cook's lawyers expected to file a countersuit with the High Court later today. Cook has sued the president, alleging that he is concocting an excuse to try to fire her and create a vacancy on the Federal Reserve Board that he can fill with a person he sees fit as a threat to central bank independence. Of course, the president has been hammering the central bank to lower rates since he took office. And on Wednesday, the central bank moved to lower its benchmark interest rate by a 1/4 percentage point for the first time this year, signaling 2 more rate cuts this year as well. Josh?
Jennifer, thank you. We are just getting started here on Market Domination. Coming up, lawmakers race to keep the government running as another shutdown looms. We're going to explain what's at stake there. Plus, packing your bags this holiday season for a trip. We're talking with Expedia's CEO about what you can expect. And investors may be winning with Nike stock, the athletic company getting a boost. We're going to explain why. Those stories and more coming up. The political conflict continues over a potential government shutdown in D.C. There are 3 big deadlines that will have significance as this looms, and our Washington correspondent, Ben Werschel, joins us now with the very latest. Ben.
Yeah, Josh, so we've got about 12 days until another possible government shutdown. Both lawmakers on both parties are kind of in a standoff at the moment. And there's kind of 3 moments, as you mentioned, that I think we're going to be watching between now and then, I think, as markets assess how real the threat here is from a government shutdown. The first deadline is tomorrow. This is when the House is likely to vote on the Republican plan here. This is kind of a clean, it's called in Washington parlance, it's a clean CR to essentially just extend government funding for a few more weeks' time. A few add-ons there around lawmaker security, but basically the Republicans want to just extend the government funding and have that be it. Democrats say that's a non-starter for them. And they can block that with the second deadline, which is in about a week's time. That's when the Senate is expected to vote on this. As of course, Senate has a 60-vote threshold. So even if it passes tomorrow, the big test will be in the Senate in about a week's time. And then the third deadline is the last 2 days right before this shutdown would begin on October 1st. All the lawmakers won't be back in town until that Monday, with the shutdown beginning Tuesday night. So I think there's a widespread expectation of a lot of last minute back and forth there. As for the economic effects here, I think it remains to be seen when markets will start to pay attention to this and start to worry about it. The rule of thumb generally on economic effects is that the only time you see economic effects is a long extended government shutdown. So once you're a couple of weeks into a shutdown, then the economic pain starts to be felt. And I think a lot of traders will kind of wait until that point, if we ever reach that point there too. Another little detail that came up today, Raymond James did an analysis of recent shutdowns and actually found that stocks tended to rise during recent shutdowns. So it might be a buying opportunity just based on the averages since 1995.
And Ben, before we let you go here, switching gears, we're learning that President Trump setting high expectations for this Friday call with Chinese President Xi Jinping on the latest TikTok deals, plus other topics of interest and discussion. Ben, what can we expect out of that conversation, do you think?
What we're set for is a real wide-ranging conversation. This is a phone call set to take place tomorrow morning here in Washington time at least. TikTok is the #1 agenda item. Trump described it today during a stop in England as essentially, he described it as kind of akin to a done deal, even as there's a lot of questions about how this kind of TikTok framework will work. Trump described it as essentially a spinoff of TikTok into all American investors, while Chinese state media still describes a level of Chinese involvement here too. At the core here is this algorithm, which simultaneously is what powers TikTok. It's what makes it worth billions of dollars, but it's also the major part of the security concerns here. Basically, if the Chinese control the algorithm, what does U.S. ownership do? What does it matter for there? So that's a big detail of how that's going to be worked out, and I think that's being worked out sort of at the presidential level as well as amongst Trump and Xi Jinping's aides. A lot of other topics as well, two to flag for you in particular. One is tariffs. Trump mentioned today that another tariff extension could be in the offing. Right now we have a November deadline where the current tariff regime could bounce up if there's a stalemate there. So that could be a nice calm to markets. And then the third is Nvidia. China recently kind of took a stand against Nvidia chips, even after it seemed like Nvidia would be able to sell there. So that's going to be a big area of conversation. You can expect Trump to push there, especially since the U.S. is set to get a piece of Nvidia's sales in China if those go forward. So a lot of topics there, but with TikTok for sure top of mind.
Ben, thank you. Appreciate it. Well, the Fed made the widely expected move to cut interest rates and highlighted weakness in the labor market as the Fed also looks through more cuts this year. We're on U.S. interest rates, strategies, and what the remainder of the year could look like for the economy and the markets. Joining me now to discuss this all is Christian Hoffman, head of fixed income and portfolio manager at Thornburg Investment Management, along with James Egelhoff, BNP Paribas chief U.S. economist. James, as the economist on the panel today, I'll start with you. Curious, James, just get your take about the Fed's decision, that cut, what you made of it, James, and what you're telling clients. Do you think the pace of cuts could look like from here, James? You know, this year, are you penciling in 2 or 3, and what about 2026?
Look, what we're seeing with this Fed is they're actually relatively confident in the economic outlook. They upgraded growth for this year and next. They took the unemployment rate projection down a little bit. They're putting in a bit more inflation, but they're overall feeling good about the expansion. They're mostly worried about the tail risk, the possibility off the central scenario that things might get a bit weaker. And what the Fed is telling you here is that they're pretty committed to making sure the expansion keeps going and cutting rates accordingly. And if the price of that down the road is a bit more inflation, they're prepared to pay it. So we're thinking we're going to see 3 straight rate cuts, this past one this week, and then 2 more this year, and then 2 more in 2026. That should take monetary policy either to a neutral level or to a level that's actually hitting the gas just a little bit. That should help keep the expansion going, should help keep the labor market tight.
All right, Christian, I want to bring you in here as well. On this same question, the pace of cuts, Gary Cohen, former White House economic advisor, Christian, he was on Yahoo Finance this morning. Here's what Mr. Cohen says. He says, it does look like we have started a rate-cutting path, he says, but it seems like it's going to be a slow, methodical path, and it's not a guaranteed path. What do you think, Christian?
I think that's right. And I think the more interesting thing yesterday was actually the market reaction. If you look at the statement, the move, and the press comments, it's kind of exactly what you would have expected. There were no real surprises. I think the market had an early reaction of saying, oh, we've got this and 2 more cuts is a done deal, and you saw, bonds rally into that immediate news. But I think as people kind of looked a little closer and saw this was a 10-9 decision, Miran, is one of the 10. You take him out, it's 9-9. The dots are kind of all over the place, and it's certainly anything but a consensus slam dunk, dovish trajectory. And you saw that even before the press conference, bonds went back to flat and then actually sold off, through the conference. There was also something about sell the news, and a lot of this had already been priced in. Look, the expectations from the market were actually higher through 26, at the end of the day. So a lot of goodness and optimism had already been baked in at this point.
James, Christian mentioned Stephen Miran there, the one dissent, presumed to be the one who wanted that jumbo size cut. There are these questions, James, that continue about Stephen Miran, Fed independence. I'm curious how you're thinking through those issues, James, as an economist. I mean, are those real issues? Is that just political posturing? What do you think?
Look, we saw a new person join the FOMC at this meeting, and we saw the person come with a very different perspective, where they were looking to have a very accelerated pace of rate cuts. We are actually very open-minded to the possibility that they pursue a very accelerated path of rate cuts, but for us, we're expecting it only if the unemployment rate spikes in the near term. I believe the new joiner to the FOMC believes that there's less cause for worry about inflation, that the monetary policy is too tight, and that it's appropriate to bring that down quickly. The rest of the committee doesn't agree, but it's a perfectly reasonable position to argue, and one could argue that there's room for some creative thought and open disagreement on the FOMC.
Christian, this question of Fed independence, how often are clients bringing it up with you, Christian?
Not enough is the honest answer. I think the market hasn't had a strong visceral reaction because this is seen as potentially a longer-term risk and problem, which is true. However, again, the market needs to discount all future information, into today's prices. I'm a bit more concerned. There are norms and conventions which you see swing. Think about a pendulum, between Democrats and Republicans, depending on who's in power. You also see secular trends and shifts over time. And I think one thing we have to look at is this is not a issue of the right or the left, that both parties and politicians by their nature have a natural incentive to let the good times roll and to have policies that favor loose monetary policy and are inflationary. So let's say we move the Overton window, that the Fed does become more politicized. What's to say that a future, left or Democratic-leaning, party does not continue to support those ideas, which could push the path of inflation, I think, much higher than, the market, potentially anticipates.
Christian, yesterday Fed Chair Powell, of course, talked a lot about the labor market, this cooling labor market, relying on data. That data in some quarters, Christian, has been called into question. Do you question the data, Christian, as an economist? Do you question its credibility?
One thing we talk about a lot is 20 years ago, 30 years ago, data was an absolute advantage, in the investment world. Today, there's actually too much data, that the challenge is processing that data, and figuring out how to make good decisions with it. So we have plenty of data that we can look at, where we can study inflation, where we can study the job market, many high-frequency data points. So we're not reliant on any one government agency or projection to make decisions. Certainly, all of them collectively inform our decisions. And look, I'm a fixed income investor. I'm very cynical and pessimistic by nature, but I actually don't believe there will be some government conspiracy to alter the numbers. Most things you see in government are actually a result of, incompetence or laziness, as opposed to conspiracy. And again, pulling off a conspiracy, in the modern era is incredibly difficult. It just takes one person to raise their hand and say, hey, something is wrong here, and it gets immediate attention. So, despite my cynical nature, that's actually something that I'm not worried about.
James, you talk to clients and you outline your base case for the U.S. economy going forward. James, I have some economists come on here and they see tailwinds, right? Tax cuts, rate cuts, deregulation, the AI boom. What do you see?
Look, we've been ever since November, we've been looking for a soft patch in growth associated with the tariff transition, and we've been looking for elevated inflation to come along with it, as well as a cooling in the labor market on both sides, with fewer people working because of immigration policy and fewer workers hiring people because of the tariff transition. I think what we're seeing here with the Fed, though, is that because they're bringing rates down, it makes it more and more likely that the soft patch will emerge from it relatively soon, and the strong growth will return next year. And that's consistent with what the Fed is projecting.
James, Christian, great discussion, guys. Thanks so much for your time.
Thank you.
Coming up, the holiday season is almost upon us, and we're speaking with Expedia's CEO about the travel outlook, plus AI increasingly playing a role in travel planning. More on that when we return. Travel is gearing up for holiday travel after a seemingly resilient summer travel season, but some shifts appear to be taking shape in travel. And Yahoo Finance executive editor Brian Sozzi has joined Expedia Group's CEO for more on the latest travel trends. Brian.
All right, thanks so much, Josh. Aaron, good to see you. I can't believe it's been a year. You just passed your, 1 year mark?
Yes, it's great to be back.
As CEO. So look, we're all trying to get a read onto the economy. We just had the Fed meeting this week. They cut rates. Consumer spending seems to be strong. What are you seeing from the travel perspective?
Well, certainly it's been a year sort of ups and downs. And if you looked at the second quarter in the U.S., there was softness in the market. We continue to see that the high end of the market, there's a lot of resilience. So higher income, higher spenders are continuing to spend, more softness at the lower end. But if you look at the numbers of people going through airports in the U.S. over the summer in July and August, they're up year over year, unlike the way they were in the second quarter. So people still want to travel.
Are the low income consumers, are they coming back? Are you getting a sense that that is beyond the worst?
Look, it's you can't sort of make a trend out of just a couple of months, but as I said, you see more people in the airports, and that is a sign that, look, people are continuing to spend, and we'll see how the holiday season ahead of us shapes up.
Are you seeing a big difference between the international and the U.S. consumer?
So certainly for our business in the second quarter, the growth outside of the U.S. was quite a bit faster than the growth in the U.S. At the same time, we're seeing fewer international visitors coming into the U.S. this year than we did in previous years. So it's really, you have to look at each country individually, and then for us at Expedia Group, we then make our investment decisions based on where the opportunities that we see.
Why do you think you're seeing that disparity with international travelers?
Look, again, I think it depends on each local economy. The international into the U.S., I think some people have chosen to go to other destinations or to stay within their own country. Again, if I look back 5 years when we had COVID, all the travel patterns around the world changed, and they change back just as quickly. So we'll see.
What is your sense of the holiday season? Are forward bookings still a thing? Is it like that's still the measurement in your industry?
Forward bookings are still a thing, but I would say this year there have been shorter booking windows, and so again, we'll see, are they shorter going into the holidays? Do they lengthen or not? One trend that we definitely see is that events are driving tourism. So to the extent that there are big events in the fall, certainly next year with the World Cup coming, we know that that's going to drive a lot of demand here in the U.S. We, as I said, we see the events-driven tourism driving a lot of growth.
Every time I talk to you, I'm reminded that I need to take a vacation.
I'll come back more often.
Yeah, no, I need to. It needs to happen. I want to leave a good chunk of this conversation because a year ago you were still settling in, but I want to talk a little bit more about AI. Yep. How is this transforming, a year in, how is it transforming what you do at Expedia?
So I'd just start by saying AI is an incredible opportunity for us. And when I think of our company that's actually celebrating 30 years next year, we had the first wave, which was about moving online with the browser. The second wave, which was about mobile and making that experience on a smaller device. And I think of AI really as the third wave. So we have to think about how do we make our products help travelers more easily find their perfect trip and take their perfect trip. How can we be more predictive? How can we be more proactive? And how can we be more personalized for travelers? Making sure that they trust that when they come to our brands or to our partners, that they're going to find their perfect trip. And then if something goes wrong, there'll be a human there that they can call to take care of it.
So you're not getting rid of the humans?
Not getting rid of the humans. I tell the teams it's AI with the human touch. There's a piece that's about what are we doing in the products for our travelers and our partners. There's also looking at how our consumer behavior is changing in where they're getting their inspiration, right? With ChatGPT, with Google and their AI summaries, people are searching in a different way. And for us, there's a lot of our traffic that comes from those places. How do we make sure our brands are showing up well there? And then, of course, there's also AI internally with our teams. And it's incredible to see the way teams across the company are using AI to give themselves superpowers, whether it's the commercial teams using AI to coach them to increase their win rate, obviously the dev teams, the tech teams using it to write code, the product teams doing easier prototypes, the marketing team. I mean, I could basically go down every function in the organization, and it's just really incredible to see the excitement and the innovation that's coming there.
You mentioned AI summaries. We see it in the news industry, how that is, these summaries from a ChatGPT, a Google, and it's fundamentally changing how stuff is consumed. How has it changed the travel industry from your perspective?
Well, again, if you look at whether it's ChatGPT or Google or even on our brands, the way we can create itineraries in a much easier and more seamless way, the way that you can actually plan a trip just by chatting, it's still, though, a small portion of not only the traffic that we get to our brands, but it's also a small portion of how people are interacting with the apps. I think the more interesting thing is, in the usual flow that people have for planning their trips, how can you inject AI at crucial moments? So for example, 70% of people look at a hotel review before selecting their hotel. And we're using AI to do smart reviews and summaries so that they can query it, so they can more easily find out what did other travelers say about this hotel, so they can be more confident in the choice they're making.
I do think, I mean, your stock's up 20% year to date. Very, very, very good. Very nice. But I think part of that is also what you are doing to pivot the company on AI. As you look out to next year, what is the one big AI project that investors should be excited about for Expedia?
You know, I'm not going to answer the one project because I think that would be a bit, I'm just going to say it would be myopic. There are so many possible ways to use AI to grow the business, both to grow the business and to expand margins, that I have the team looking really across the board. By the way, I think the other thing in our company that's exciting to see is we've got both a big consumer business and a big B2B business. And over the last year, we've been able to maintain the momentum on the B2B business. It's growing in the high teens, so growing quite quickly, and done a lot of foundational work in the consumer business to really make sure that each of our brands has a great value proposition. It comes through in the product. We're tuning the loyalty program, and we see the numbers internationally really showing up. So I feel good about that.
I'm asking all CEOs this, and since you're here, I'm not singling you out, what President Trump has put forward in terms of quarterly earnings. I asked Okta's CEO about this, Todd McKinnon. He said, I'm okay, maybe if I don't have to report every quarter. Would it be good if you reported semi-annually?
Look, either way, what I would say is, even for us, the quarterly earnings, yes, it's an external process, and we share our results. I don't think it would necessarily change the decisions that we're making internally. We are running this company for the long term to create great shareholder value, and I think we're getting support to do that.
Do you really like answering margin questions every quarter from Wall Street?
If I can come see you every quarter.
All right, fair enough. Well, don't be a stranger. Come back in less than a year. Ari and Goran, good to see you. Good to see all the work you're doing there.
Great to be here. Thank you.
All right, Josh, back to you.
All right, Brian, thank you. Coming up, Novo Nordisk is squeezing out the competition, and we'll explain when we return. All right, now time for some of today's trending tickers. Yahoo Finance's Alec Canal joining me here for a look at Nike. We'll talk some bullish, maybe a little Novo Nordisk. Let's start with Nike. That company getting an upgrade over at RBC, lifting its rating on that stock from sector perform to outperform, Ali. So they are believers. The analysts highlighting steeper revenue recovery supported by the upcoming World Cup. Nike's taking the right steps with clear improvement in running footwear, positive channel checks. Target is 90. What do you think?
Yeah, I mean, there's certainly upside from current levels, around 20 to 25% from here. And it really is about the reset into 2026. You mentioned some of that new product innovation, this big marketing push. You have that FIFA World Cup. Nike sponsors 6 of the top 10 ranked teams. And they estimate that event alone could add $1.3 billion in sales. So a significant opportunity there. And it's the turnaround narrative, too. You were just alluding to the fact that Nike's revenue revenue has really lagged behind some of those competitors on Hoka, but RBC saying that that competitive gap likely bottomed in 2025, meaning that the growth gap could start closing as soon as next year. So think potential beat and raise cycles for Nike as it continues to regain some of that shelf space, reset some of that running shoe lineup, and rolling out 26 new launches through 2026. So maybe this is the start of a turnaround here for this company.
Next earnings announcement, September 30th. So mark your calendar. And heading into that print, Street mostly bullish. Most are buys here. All right, turning to bullish, seeing a pop in today's trade following its first quarterly results after its IPO. So the crypto exchange alley, second quarter results, Q3 guide, investors seem to appreciate. Barron's also noting they did receive a BIT license from New York's Department of Financial Services, which allows Bullish to launch virtual currency trading in the U.S. in the fourth quarter. Citi, which likes this one, saying that license award alleviates, they say, some hangover as investors build confidence towards 2026's growth expectations. Their target goes to 70 on that one.
Yeah, the BIT license that you were just referring to, that's been categorized as a regulatory green light by CEO Tom Farley. He called it critical when it comes to the exchange's U.S. expansion, and it's really a big credibility boost at this point. Bullish already has licenses in Hong Kong and Germany, and now it can finally plant its flag in what it calls the largest geographic market by far. You were just talking about some of those analysts on the street that are bullish on Bullish. Compass Point raised its price target to 56, Bernstein's at 60. So really highlighting that U.S. growth is a key catalyst here when it comes to future moves. Now keep in mind that Bullish only went public last month, and it's now trading more than 60% above its IPO price of $37 a share. Bullish also owns CoinDesk, so that gives it both trading and media when it comes to its overall footprint. So not bad for a company that once had its SPAC deal scrapped back in 2021 here. Not
too shabby. All right, lastly, Novo Nordisk releasing results on the trial for its Wegovy weight loss pill and the data pleasing Wall Street. Its diabetes drug Ozempic, I was seeing reports here, sounds like it did beat Eli Lilly's Trulicity in a survey of certain U.S. patients. Bloomberg with the summary, Ali, say Medicare patients who took Ozempic 23% less likely to have a heart attack, stroke, or die than people on Trulicity. Study followed apparently about 60,000 people with heart diabetes and heart disease.
Yeah, and this is a space that we've been talking about a lot when you look at healthcare across the board. Wegovy, Ozempic, this is a big fad right now, and there was a lot of optimism probably around a year ago that this was going to continue, and then we lost a little bit of steam in healthcare, but now it feels like with a lot of these studies, investors are squarely focused on what the future is for Ozempic, when we can get that pill form. Obviously, that will be massive for the market and really create a lot of opportunity here. Taking a look at Novo shares, let's see where they are trading. I believe we're looking at a 6-month chart. They are down over the past 6 months, so maybe some room to run in terms of the valuation, but it feels like an opportunity. It's trading really below some of those 52-week high ranges, probably in the midpoint, I would say. So some chance maybe for investors to really pile in here.
Yeah, Novo's talking. It's been rough over the past 12 months. I mean, it's down more than 50%, but higher in today's trade. All right, thank you, Ali. Well, the Fed lowering interest rates by 25 basis points at September's FOMC meeting, the move creating a host of new opportunities in the options markets. We're going to break down some of trades with the options playbook sponsored by Tasty Trade. And joining me now is David Boole, Managing Director of Equity Derivatives at Baycrest. David, it's good to see you. So, stocks in the green, David, coming off that big Fed meeting. Maybe just start big picture, David, where we are right now. How do you want to be positioned here?
So the Fed meeting came and went, and it achieved essentially the status quo, and the path of least resistance is higher for the equity market. So essentially, no surprises is good news right now. Obviously, cut 25 bips, paved the way for 2 more cuts later this year. It was kind of a balanced cut. So kind of just back to the normal playbook today, where grind higher in risky assets. I think the rotation trade may continue going into small cap stocks, anything rate related, home builders, likely does well from here. And then of course the tech news this morning with Nvidia and Intel, that brought a bid to tech. So essentially everything was going up today.
Let's get to some trades, David. Start us off with the VIX.
So The VIX is really interesting right now because it is a calm period. Usually people think of the VIX as a fear gauge, how much insurance costs to protect a portfolio. And they really only focus on it when the VIX is spiking to 50, 60, and it's super intense risk off periods. Right now is a really interesting time to play another aspect of the VIX complex, what we call the VIX roll down. And so what this is that in a normal environment, the shape of the VIX term structure is upward sloping. Longer dated implied volatility costs more than shorter dated implied volatility. Essentially, there's more uncertainty the further you go out in time versus tomorrow. And that's especially true right now where the market's quite calm on every day, and looking out 30 days, there's some transparency. But going out 2, 3, 4 months, there's obviously some overhang, some reasons why people may want to hedge and lock in a good performance year. So a trade that many traders are looking at right now is capturing this roll down the term structure. So for instance, VIX spot is about 15.5. VIX October futures, essentially where VIX will be in mid-October, is about 17.5. And VIX in November is up above 19. So it's somewhat predictable if things stay about status quo that VIX futures is going to roll down towards VIX spot. So you're not even betting on the market going up 1%, down 1%. It's just kind of like generally staying in here. And we know those VIX futures are going to converge to VIX spot. So seeing a lot of traders play that with VIX put spreads, VIX ratio put spreads, anything to sort of get a good risk reward, VIX butterflies, if VIX futures roll down from 17, 19 into this 15 area. It's a great trade right now.
David, switching gears, plenty of folks have been on here. Smart strategist David pound the table on small caps, and for good reason. You know, if you think the economy is hanging in there and the Fed's going to be cutting, today I'm looking at Russell 2000. We're tacking on 2.3% in today's trade. What do you see with the small caps, David?
So this is a good time to talk. This has been an incredibly active week for IWM options. Wednesday, the day of the FOMC, was, I believe, the highest put volume day ever for IWM. And if people were buying short-dated put spreads, and one of those expirations was this Friday. Tomorrow, there was another big put spread out to September 26th, I think probably targeting the US PCE as well. But if there's big hedges going up, that likely means a lot of risk is being put to work. So a lot of buying of small caps, and then obviously you'd like to hedge some of that exposure. And then today, I've seen calls quite active again today. The 245 calls have traded over 100,000 times. There's a lot of action in IWM right now. You're right. If I was going to play upside in IWM from here, I would think about call spreads. I would go past PCE. I would go past non-farm payrolls and go to October 3rd to buy a call spread. Those usually price really well in IWM because upside calls are pretty expensive. So they line up well.
Finally, David, you mentioned home builders at the top. Lennar, by the way, that name, earnings report on deck. How you thinking through it?
So I thought this was wrong when I looked it up. Lennar has gone down 7 times in a row the day after earnings. And now it seems we're having a sentiment shift. I was looking at Restoration Hardware last week, obviously tied a bit to the housing sector and obviously tied to rates. We were talking about the Fed earlier. And Restoration Hardware had bad numbers and they cut guidance, and the stock went down a lot less than the options were anticipating. So I'm thinking there could be a sentiment shift in this whole sector. And so Lennar will be a good indicator for the whole sector. About 4% implied move tonight after the bell. I think it sets up to the upside. I'd want to play a call spread or a call fly because I think you could have this interesting setup where good news is good news, and then bad news isn't taken so much as bad news because the market's going to look past whatever that bad news is and see rate cuts and mortgage rates go down, and that may be a good thing for home builders.
David, appreciate your time in those trades. Thank you.
Thanks for having me.
While wrapping up today's Market Domination, don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime.